The current livestock price for Our Loop Inc., HOUR, is 3.96, reflecting a staggering intraday surge of over 109% at this hour. The sheer velocity of this move is not merely a price change. It is the manifestation of a seismic shift in market sentiment, a dramatic repricing that few anticipated even as recently as this morning. The expectation for HOUR, until now, has been one of a microcap struggling in a difficult e-commerce landscape, an often overlooked player in a sector dominated by giants. Its historical price action has been characterized by volatility, yes, but rarely with this kind of explosive high-volume breakout. This isn't a gradual climb, it's a vertical launch, and it forces a fundamental re-evaluation of what is driving this company's valuation. The common belief held by many retail investors and even some casual market observers is that HOUR is a speculative play, a low-price stock with limited institutional interest, subject to the whims of meme stock rallies. This morning's action, however, suggests something far more complex and potentially more sustainable than a simple short squeeze or social media frenzy. We are witnessing a cascade of buy orders that is chewing through supply with a ferocity that points to a significant, underlying catalyst, whether it be a hidden fundamental development or a sudden, collective awakening to a new narrative for this company. What we're seeing today with Our Loop is a classic tension between a persistent, deeply ingrained market narrative and a sudden, undeniable reality. The narrative has long been one of a small-scale e-commerce player, an afterthought in a world of Amazons and Walmarts. Reality, however, is a stock price that has more than doubled in a single session, driven by trading volume that is absolutely off the charts, exceeding its 30-day average by an astronomical margin. The volume today stands at an incredible 185 million shares, a monumental figure for a company of this size, dwarfing the average of around 332,000 shares. This isn't just retail enthusiasm, it's an institutional scramble, a rush to get ahead of a story that is clearly evolving in real time. The movement isn't linear either. We've seen rapid spikes and pullbacks throughout the morning, a battle between early buyers taking profits and new money flooding in, pushing the price to new intraday highs. The intraday high of 5.4 and the low of 2.57 tell the story of a highly volatile but overwhelmingly bullish day, where every dip has been met with aggressive buying pressure. This kind of price action, combined with the sheer volume, indicates a very high level of conviction among participants, something that transcends the typical pump-and-dump cycle often associated with penny stocks. This is a powerful signal that the market is recalibrating its view of Our Loop, perhaps on the back of news or a rumor that hasn't yet been fully disseminated to the public. It begs the question, what is the market pricing in that we don't yet know? To understand the magnitude of this movement, we need to look beyond the immediate price chart and consider the broader context. The consumer discretionary sector, which includes e-commerce, has faced significant macroeconomic headwinds, recently inflationary pressures, slowing consumer spending, and fierce competition. In this environment, a company like Our Loop was expected to be a casualty, or at best, to tread water. Yet, it's not just surviving, it's thriving with this explosive momentum. The fact that this stock is rising so dramatically while others in the sector may be facing pressure is a contrarian signal in itself. This move is not a sector-wide tide lifting all boats. It appears to be a company-specific event. A recent SEC filing or an internal company announcement that has not yet made mainstream headlines could be the source. The stock's previous 52-week range was from a low of 1.1 to a high of 6.9, and today's move has launched it back into the upper echelons of that range, a feat that seemed highly improbable just a day ago. The company's last reported earnings from the second quarter of 2025, released on August 12, showed a return to profitability and a revenue increase, but this news alone did not spark a move of this magnitude. This suggests that the market is now reacting to something new, something that builds upon those solid but previously unappreciated fundamentals. The market is now looking past the small-scale nature of the business and seeing a potential for rapid expansion, a strategic partnership, or a significant shift in its business model. Let's ground this with a brief look at what Our Loop actually does. The company operates as an online retailer, selling products in diverse categories from home decor and kitchenware to toys and apparel. Their business model is centered on selling these products through their own website and, critically, through major third-party marketplaces like Amazon, Walmart, eBay, and Etsy. This last point is key. While the company itself is small, its business is integrated with the largest e-commerce platforms in the world. This symbiotic relationship means that while it faces competition, it also benefits from the massive user base and infrastructure of these giants. The common perception is that this makes them a price taker, a passive participant in a brutal race to the bottom. But what if this model is actually proving to be a highly efficient, low-overhead way to scale? What if their reported profitability in the last quarter was not a fluke, but the first sign that this lean business model is hitting a critical mass of operational efficiency? The market may be realizing that the company's asset-light model, relying on the infrastructure of others, provides a flexibility and scalability that is underappreciated by traditional valuation metrics. The story is shifting from a company that sells on Amazon to a company that has mastered the art of selling on Amazon, a crucial psychological distinction for the market. This shift in perception can lead to a significant repricing of the stock, just as we're witnessing today. The future outlook for Our Loop now sits at a fascinating crossroads, a tension between the new reality of its stock price and the underlying expectations for its business. On the one hand, the incredible volume and price action suggests that a major catalyst is at play. This could be a new product line announcement, a strategic acquisition, or a very favorable analyst rating that is about to hit the wires. The market is often a leading indicator, and this kind of move can precede a major news release. The potential for a significant partnership, perhaps with one of the large-scale retailers it already works with, could completely change the growth trajectory of the company. On the other hand, the risk is always present that this is a fleeting moment of irrational exuberance. If the catalyst behind the move fails to materialize or proves to be less significant than anticipated, the reversal could be just as swift and brutal as the rally. The volatility is a double-edged sword. It presents opportunity but also significant risk. For investors, the question is whether the fundamental value of the company has genuinely caught up to this new price, or if the price is simply a reflection of momentum and speculation. What we are witnessing today is a live case study in market psychology. The expectation was that Our Loop would continue to be a quiet, sub-2 stock, largely ignored by all but the most dedicated microcap traders. The reality is that a massive high-volume surge has blown that expectation out of the water, forcing every single market participant to sit up and take notice. The narrative has shifted from, "What is this company?" to "What does this company know that we don't?" The immediate challenge for Our Loop, once this dust settles, will be to capitalize on this newfound attention and justify the massive repricing with concrete, forward-looking guidance or business developments. If they can, today's move will be seen as the beginning of a new chapter. If they can't, it will be remembered as a speculative spike. Comment below on what you think is driving this incredible rally in HOUR. Do you think it's a fundamental shift, or is it a short-term speculative bubble? In summary, the narrative for Our Loop Inc. has been completely redefined in a single trading session. The expectation of a quiet, forgotten microcap stock has been shattered by a reality of a high-volume triple-digit percentage surge. This dramatic repricing is not the result of a single news event, but rather a profound shift in market sentiment, likely anticipating a major catalyst that has yet to be publicly confirmed. Whether this is the beginning of a new, high-growth phase or a temporary speculative bubble remains to be seen. But one thing is certain. The market's perception of Our Loop is now fundamentally different, and investors must approach the company with this new, complex reality in mind. The quiet e-commerce player is quiet no more. It has announced its presence on the market with a roar that demands attention.